Happy New Year, traders. This is Trader Geek Sam with your Sunday, January 4th, 2026 market review and preview. Hope you had a great holiday season. And we're going to start off things by taking a look at the year that was in terms of some stats, and then we'll get to what's coming in the near term. So we're starting out with Friday's action, which was a bit lackluster and kind of split. Bitcoin gaining 2.6%. Think that would have boosted the equity markets, but they were pretty mixed. And you can see that the SPY was up, 18 basis points, but basically the Qs were down 20 basis points. VIX lost 3%, and Magnificent Seven were subject to profit taking down about 0.92%, but mixed bag. But mid caps did gain about 1.33%, and the small caps did gain 1% on the first trading day of the new year. Looking at the past week or so, Bitcoin up 2.5%. Basically, the only one that was really sadly up, the dollar was up about 0.5%, but everything else showing some red, especially gold losing about 4.5%, and the Magnificent Seven losing about 4% in that what was supposed to be a nice Santa Claus rally, basically a lot of profit taking. The Qs losing about 1.75%, and the microcaps, which did well on the year, losing about 1.25%. High yield bonds up about just 9 basis points, in the dollar, as I said, getting up about 0.5%. So mixed week. If we kind of take a look at the month of December, and you can see Bitcoin recovering about 2%, not enough to bring it into the green for the year. Microcaps up almost 2%, and the gold, despite the last week's weakness, giving up or coming up about 1.7%. The Dow Jones were the strongest of the indices, albeit only 30 stocks up 1.5%. And then down at the bottom, the VIX really getting hit, down 13%, under that 15 mark for the year. When we look at the dollar, lost 4%, and the TLT, the 20-year bonds, losing 1.8%. So not so great as expected for December. Some profit taking. Looked like that a lot of the gains that were expected over the Santa Claus week, which doesn't end technically until tomorrow, January 5th, but we'll see what that brings. And the uncertainty over geopolitical events over the weekend could kind of mess things up, so to speak. If we take a look at the quarter, the final quarter, fourth quarter of 2025, we see gold far and away the leader, up 11.5%, despite the end of the year weakness. Microcaps up almost 6%. The Dow up 3.6%, emphasizing a little bit of a value tilt for the fourth quarter. SPY's up 2%, and the Qs almost neck and neck. And the total market index from Vanguard up 2.16%. Here's where you see in all the damage in the Bitcoin, down 24%, the VIX losing 8%, and 20-year bonds 2.5%. Dollar not showing much strength either in this quarter, and the high yield bonds losing 0.7%. Mid caps right in the middle there, up 1.22%. So if we look at now the entire year, actually this should be this chart here. Let's see, major markets 25. That should be 12/31/2025. Not sure why they both had the same thing, but here we go. Gold, far and away the leader for the year, up 64%. I don't have silver in here, but that was up about 140%. Magnificent Seven, still despite the last month weakness, up 21%. Microcaps, besting even the Qs at 21%. and the SPY at 16% for the year. That's without dividends. When you add in dividends, so for a total return, you get about 17.9% on the year. A VTI probably closer to 17% when you include dividends as well. Dow, not too bad, 13%, but VIX losing the most ground as you would expect, but not as much as I would have expected given a 16% year. The VIX closing around the 15 level. We never really got down to the 12s or 11s during the year. UUP, that's the dollar losing 8%. And in the currency world, that's quite a bit. GBDC, Bitcoin losing about 7.65% for the year. That's the Bitcoin. TLT, another losing year for the TLT. And so the long-term bonds just can't get any traction, and starting to wonder whether those are in a secular downtrend. Although the high-yield bonds, which are highly correlated to the stock market, but not really showing it this year because the correlation would have meant that they should have been up at least 8 or 9%, not just 2.5%. Aggregate bonds up only 3%, mid caps up about 6%. So taking a look at the sectors for Friday, metals and mining up 3.78%, despite kind of the gold pulling back all day long. All the metals pulled back. XLE energy up 2%, but boy, they haven't performed. XLI, the industrials up 1.84. At the bottom, consumer discretionary, kind of on the back of Tesla and Amazon, up almost 90 basis points down. XLC, basically, that's Meta, Disney, Google, and then the staples. If they're going to recover in 2026, they certainly didn't show any oomph whatsoever. In fact, you look down here and the defensive sectors just did not perform, and we'll see more of those as we get into longer time frames. This is the week. On the week, energy was up 3.28%. And again, this was a holiday shortened week. We had only 4 trading days, given that New Year's was closed. The utilities up 0.94%, and the industrials up 0.5%. At the bottom of the list, 3.03% losing. That was the consumer discretionary. Retailer stocks, which tend to be a little bit weak after Christmas, so that's kind of expected, but right on par with what the technology stocks did in the last week, which was nothing. And XLF, the financials losing 1.25%. Looking at December on a sector by sector basis, metals and mining, far and away the leader for December. IYZ telecommunications stocks. This includes the networking company Cisco, among others. Netgear, or not Netgear, ANET, and other kind of network infrastructure stocks, in addition to your typical AT&T and Verizon. XLF financials up about 3.5%, and communications up 2.5%. XLI, being the industrials, up 2.5%. Transports showing good strength in December, up 2.29%. At the bottom, utilities just can't find a bottom, it seems, and energy down 2%, along with staples, still can't hurdle that $80 level, the XLP. Real estate 1.8%, and XLV. So you can see for the month of December, even though it was not a very strong risk on month, even the consumer staples or the defensive sectors could not mount a significant rally. So we'll see once volume returns this week how these out of favor sectors fare, and whether these defensive sectors are going to start to show strength, or if we're going to show more risk on behavior. Technology up 0.5%. So let's take a look at the quarterly basis for the, nope, this needs to be 2025. Go. So for the fourth quarter, uh, outperforming, it was healthcare and metals and mining, telecommunications, transports, and the technology sector. At the bottom, real estate uh, and utilities. And then XRT is the retailer stocks. You can see that, again, staples, all of these are relatively defensive sectors. I guess you could say retailer stocks are not that defensive, but at least XLE eked out a tiny gain. But we'll see here when we switch to 2025 that nothing came even close to the metals and mining stocks. What a monster year, up 83% if you bought the XME. IYZ, 26.35%. That's telecommunication. Technology, respectable 24%, and then communications up 21. At the bottom, you can see staples lost ground, albeit a little bit. And if you count dividends, then it was basically flat on the year on a total return basis. Same for real estate, down 0.79, but two out of these sectors were basically negative on a year-over-year price basis. You can see that energy did eke out a gain, as did consumer discretionary, and such a risk-on year to see XLY perform so badly. I mean, 6% is nothing to sneeze at, but it's still, when you consider the risk-on behavior to have consumer discretionary stocks only up 6%, that's kind of not a win. XRT retailer stocks. Materials, rounding up the sub two-digit up sectors. If we take a look at industries, and you can see the last week of the first day of the year, you can see that solar stocks were up 5%. KWeb, these are the Chinese internet, after some persistent weakness in December, bumped up about 4.64%. Blockchain stocks up 4%, along with Bitcoin on Friday. And the SMH knocking on all-time highs. So that was pretty strong on Friday, even though not all the semiconductor stocks were participating in that rally. At the bottom, we can see that software is not eating the world, as they say, down 1.8%. FDN, internet stocks, cyber stocks just can't catch a bid, or they just can't catch any traction. Little profit taking in biotech, and the gold miners were a bit flat on the day. Looking at the week, and we don't look at the industries every week, but given this is a year-end kind of review, we'll take a walk through and see the week. XOP, you can see that energy, exploration, and production stocks for oil up 3.2, KWeb up 2.3, and semiconductors up 2%. At the bottom, GDX lost about 6%, but boy, what a tear that's been on. Software down 4%, cyber stocks 3.36%. And you can see here that for the week, it was pretty mixed, kind of half up, half down, or really less than that. Looking on a monthly basis, the pot stocks basically led the way, 22.6%, far and away, but these are so volatile, and it's not funny. I don't know anybody that's really trading them actively and making money. ITA, these are the defense, not the defensive stocks, up 7.75%. Entertainment stocks 3.62%, and GDX up 3.56%, despite the end of the month weakness. At the bottom of the list, KWeb, despite the strength in the last week, was still up, down 10.37. That's the Chinese internet stocks. ITB, home builders losing 7% in December. XOP, exploration and production, 6.65, and blockchain stocks losing 6.25%. Looking at the quarterly performance for these industries, you can see that XBI was very strong. That's the biotechs, up almost 22%. Solar stocks having a respectable quarter, up 12.5%. But again, these are pretty volatile, and we can't seem to see whether they're solar stocks or they are the pot stocks or the sustainable energy stocks. They just can't seem to sustain any consistent rallies over a period of months or quarters. GDX, respectable, up 12%, semiconductors up 10, and robotics stocks about 5.75%. At the bottom, there you go, KWEB. Now you know that this one basically was hit by tax loss selling and some fears over the growth in the Chinese economy. And finally, we saw it recover on the first trading day of 2026. Blockchain stocks, along with Bitcoin, down 15%. And you can see ITB, home builders losing 10%, cyber stocks down 6%, and software down 5%. So a little bit of an indication of the weakness in the internet stock. Taking a look at the industries on a 2025 basis, nothing even came close to the gold miners, up 153%. Incredible performance after many years of kind of lagging performance, and came back with a vengeance along with gold. Semiconductors up 49%. Closely followed, believe it or not, by solar stocks up 48%. ITA defense stocks doing well, up 47%. And the biotechs, despite the end of the year weakness, up 35%. Blockchain stocks up 31%, and the pot stocks finally had a positive year, up about 24% on hopes of more deregulation and declassification of marijuana. At the bottom of the list, we lost ground in the home builders and XOP, exploration and production stocks. Software lost 1%. So go nowhere for software, whether it was CRM software, Snowflake, Adobe, just basically a go nowhere. But the internet stocks did gain about 10% on the year. If we take a look at the Mag 7 and how they did for the past week, basically all negative over the past week, except for Google eking out a small 11 basis point gain. The worst of them, Tesla, after testing resistance, pulled back about 8%. Microsoft losing 3%. Amazon just can't seem to get any traction. I see this one on a lot of lists for outperformance in 26. We'll see if that happens. This is the one they're going to, presumably after everybody wrote off Google in 2025 and everybody writing off Amazon, and maybe this will be the year for Amazon to emerge. On a quarterly basis, Meta lost 10%, Microsoft lost almost 7%, NVIDIA, believe it or not, after all the ups and downs and an outstanding earnings report, was basically flat on the quarter. And then Tesla, eking out at 1%, was looking a lot better earlier in the quarter. It kind of lost ground in the last few days of 2025 on profit taking. Google, nobody even came close. Nobody was double digit except Google, rising in the fourth quarter almost 29%. On the year-over-year basis, we can see that all of these basically were up on the year, all 7 out of 7, with Amazon being the laggard, only up 5%, Apple second place at 8.56%, Tesla a respectable 11%, though you can see that 5 out of the Mag 7 underperformed the SPY and the QQQ. So what was really propping up performance for both the Qs and the SPY were NVIDIA and Google to a great extent helping things out. So there you have it, the Mag 7 for 2025 and the ordering there. All right. Something I haven't shown in a while that I'd like to just kind of share, like what happened last year in the size versus value. And what I want you to see here is if you were large cap growth in terms of your style, up 21%, and large cap value up about 10.1%. Go to mid cap growth and you can see that that was up 6.54. Mid cap value up 5.31%. Small cap growth was up at 4.28, and the mid cap or small cap value was up 4.7%. So definitely large cap was the place to be. The smaller the stock, the smaller the performance. So I thought that was kind of interesting to see. And then one last style here, and this is kind of like S&P factors for the year. And if you were high beta, you were the outperformer. If you were in the SPHB, up 32%. Momentum, obviously, up 25.5%. IVW being the growth up 21, and then SPVM, that's the high value momentum. Again, momentum was king. High beta was king. What was the laggards? Dividend stocks right down here, and the low volatility stocks. Surprisingly, quality stocks were only up 6%. So it wasn't about the quality of earnings that boosted some of these. And growth at any price, SPGP, growth at a reasonable price, I should say, SPGP, only up 8.56%. And then minimum volatility or variance up only 12%. So you can see here that if you were growth, you were doing better. Although pure value, a respectable 14.58%, but it definitely underperformed the growth. And you can see even enhanced value did better. So PKW being the buybacks was up 16%, but you can see that most of these factors underperformed a straight S&P 500 fund. So relying on factors, unless you picked high beta or momentum, you underperformed the SPY. And it goes to show that just because you spend more on your funds in terms of expenses doesn't mean that you're going to get that extra performance. All right, switching gears here, let's take a look at and talk about the main indices as we do every week. And what we're looking at here is the SPX, and we have a daily chart, we have a weekly chart, and a monthly chart. I'm a multi-time frame, top-down kind of a trader. And so what we have here for the people looking at here, let me kind of explain what we have. Red line here is 200-day. Purple line here is the 100-day. This blue line is your 50-day. Green line, 21-day. This little squiggly line is your standard Bollinger Band, 2 and 20. And you've got this blue line is your 8 EMA. So we've got all of those explained, and a little bit messy, but you can see it. But this is a daily chart. You can see that we have been one time framing down ever since we peaked up here. and made a new high on the 26th of December. And basically, that was not a really strong day because we closed lower than we opened. You can see MACD is now flipping back over from the fast line over the signal line. And we still have a middling relative strength index down here. Taking a look at things, you can see that this gray line here was the lower edge of the options implied expected move for last week. And you might recall, actually, we didn't do a video last week, so you can't recall. It was only about a $64 expected move last week. And we closed right on that lower edge of the expected move. Here's the upper edge in this other gray line up here. And now you can see that the new ones that are put in place, we have about an 83 point expected move for this coming week. Here's the upper edge right up here at 69.41 and the lower edge at about 67.76. So we've got an 84 point move, and as you'll see in a couple of minutes, a jam-packed economic calendar. Flipping things to the weekly charts, you can see that we've been sideways for weeks. I mean, since October 27th, we have really up and down, but really have gone nowhere. So if we go to the week ending October 27th, we close at 68.40. And where did we close on Friday? 68.58. So we've basically traversed 18 points. So if you are a regular seller of option premium, you did very well if you were able to hold on through these wiggles and jiggles over the past, call it 2 months. MACD is still negative on the weekly chart, never flipped positive, never got enough momentum to get up there. And we never did hit that 7,000 mark that everybody was calling for by the end of the year, though we came within 55 points. Relative strength index is here at just slightly above the 60 level, still kind of in no man's land. If we flip and take a look at the monthly chart, still one-time framing here. I'm going to maximize this chart so we can see it a little bit better. And it's still a lot of information on here, but you can see here we've got a bit of a doji. So low of 68.24, high of 68.94, a 70-point range for the whole month of December. Let me see if I'm talking about. Sorry about that. That was just the first trading day. So 67.20 to 69.45. That's more like it. So you could see that we basically had a doji for the month of December. So this is something where you want to look at. If we take out the high and break out, we could see some more strength. But if we take out the low, the 67.20, that would really be a caution sign. When you have a doji like this, the upper edge and the lower edge tend to be kind of where we might fall out of balance, so to speak, for at least on a monthly chart basis. You can see MACD is still positive on the monthly, still solidly overbought, but going sideways on the RSI on the monthly. So monthly looks great, except for this doji. So we don't want to get below 67.20. If we do, especially on a closing basis, that could portend a little bit more ominous trading environment. Flipping over to the NDX, which was weaker than the SPX, at least on Friday and throughout this presumably Santa Claus rally period. You can see, you can draw a line here, downtrend line if you want to, but MACD has flipped negative. We are now below the 50 level on RSI basis on the daily chart. We haven't made a new all-time high in the NASDAQ since October 29th. So we didn't even come close. So you could say that we had a low and then a lower high here, higher low, and a lower high again. So we got somewhat of a wedge pattern coming playing out. So we will see what happens here, but we're not seeing a lot of strength out of the Nasdaq, and you can see that this also closed right about right below the 50-day and right on the options implied expected move. On a weekly basis, again, uh, not showing much strength. We've stopped one-time framing, and we made a lower low last week on the weekly chart. MACD is certainly negative, and we are at the 58 level as far as RSI goes. But you can see here that you have this long tail. Um, some people might call it a hammer, some people might not, but essentially, we don't want to take this low down here, 24,647. That would portend a bit more bearishness. Looking at the monthly chart, again, another doji on the monthly for December, and our first trading day doesn't tell us a whole lot on a monthly chart, but the we can see here that the fast line looks like it wants to start curling on the monthly, but we have a lot of time in the month to go with a RSI that's still overbought. So benefit of the doubt goes to the bulls on the monthly chart, although we could see something develop a little bit more bearishly on the monthly chart. So we're under major moving averages on the daily, so we need to do some work. And even though on the longer time frames, the bulls have the advantage on the shorter time frame, it's the bulls that need to do the work. You can see that we flipped over a bearish chandelier stop. That's a volatility stop, but we're still bullish on the PSAR. But take out Friday's low on a closing basis, 25,206, and that'll flip that parabolic stop and reverse to the red side. You can also see, by the way, you can see here and here that chandelier and PSAR are still positive on the NDX. And then finally, taking a look at the RUT, finally showing some strength, but really disappointing. We hit a new all-time high up here and came down, made a lower high, and now a lower low. So we are in a daily downtrend, bearish chandelier, bearish PSAR, MACD is negative, and we are at the 50 level on the RSI, which is a bit neutral. But the only one here, it looked like a nice strong bounce off the 50-day. We'll see if we get follow through on the Russell 2000. And it was interesting. I was reading something that what's happening with a lot of these small caps is a lot of these successful and profitable small caps are being taken private by private equity, and that's leaving kind of the I don't want to say the worst of the worst, but basically the not so great ones. So the really good small caps are being culled out of the herd for in favor of taking them private, and what's left are not some of the best small caps out there. That's all I'll say about that. Looking at the weekly, you can see here that we did take out last week's low, MACD flipping back negative on the weekly chart, and we have a 60 RSI, which is above the neutral level. Again, after this nice new all-time high, we've basically gone sideways to down on the weekly. But we do have a bullish chandelier and bullish PSAR. We would trip it all the way down here. That's the PSAR dot, and down here for the chandelier. So still a margin of safety. We closed above the options implied expected move on Friday, so that's a good thing. And then you can see this big topping tail for December, which doesn't have a good look on the monthly chart. So we'll have to see with the MACD being very positive and the RSI at the 63 level. Never got overbought on the small caps like we did on the NDX and the SPX. So far, IWM or the small caps have not showed leadership in this market. So overall, a very mixed bag and more consolidation and volatility ahead if I'm going to be Captain Obvious here. We also take a look at the expected move for this week. And if we come over here, we can see it's about 83 points, give or take, for this week. And you'll see in a minute all the economic reports we've got coming. So I tend to believe that this is a bit understated, and we probably will see a lot more movement than that might indicate. And especially that we're still ahead of the futures open on a Sunday, and no telling what kind of reaction we're going to have to the um, uh, invasion or whatever, the bombing and the taking of the Venezuelan president and his wife as prisoners. In any case, what I like to look at as kind of an indication, and let me see if I can resize this, is the um, Bitcoin, how that's trading, and that's up 70 basis points today. So, um, and that's kind of my measure of sentiment. And usually, when that's up, the futures market open up. So, if Bitcoin were down a lot, that might tell me that the markets might close up, might open down. But this is a more of a positive sign that we might not see much of a reaction to the downside on this Sunday. So. Take that for what it's worth. Taking a look at the VIX, and we didn't look at the chart, but we know what's happened with the VIX so far. Um, I mean, it's been pummeled. We haven't made a new low since the Christmas Eve low of 1338. So we're back up here. But I mean, this is basically nothing. We're at 14 and a half. And if you look on the weekly and the monthly, which is really not worth much, we've really gone nowhere in the VIX, and we did not make, despite a 16, 17% year for the SPX, we did not make a lower low in the VIX in 2025. If I switch this, let's see the time frame. Let me make this a yearly basis. What the heck? Let's go for it. All right. So here is the 2025 candle. We hit a high of 60. And in 2024, we hit a high of 65. So we didn't even make a higher high at all. And did we make a lower low? I don't think so. So the low in 2024 was 10.62, and the low in 2025 was 1338. So even though we made our low late in the year, we still didn't undercut the low here. And if we go back to 2023, the low was 11.81. So take it for what it's worth. Maybe not a whole lot, but we didn't get a higher VIX last year, but we also certainly didn't get a lower VIX either, given that we were up 17%. Taking a look at the short term of things, if we close at 14 and a half, let's go out one full point to 15 and a half since we're right on it. Our next monthly expiration is coming up in 16 days on the 21st of January. This is when the VIX options expire, and then the subsequent morning they roll off the board, as does the current VIX futures contract. And we can see here going out $1. If you were bearish on the market, you'd be paying, say, a buck 26 and a half for the calls. If you're bullish on the market, then you'd probably be buying the puts, and those are priced out at 6 cents. So definitely bias to the bears on the pricing of these VIX calls versus the VIX puts. So if we take a look at the next monthly expiration, we can see it a little bit more dramatically, although I don't like it when I see no bid here. So 15 and a half, no bid. Let's look at 15. Let's call it about, say, three and a quarter, but we go out and there's just no bid for the 13 and a half. So definite advantage to the market bears here, saying that volatility is expected. And if we take a look at the VIX contracts, they are definitely in contango. Contango meaning that uh, the further you go out, the higher the VIX, and even 17 days out, the next VIX futures contract is at 16, where the spot VIX is at 14 and a half. And then you go out further, 18 out 45 days, then 19. So this is in a regular formation for the VIX, given that the further you go out on time, the higher the VIX. And that's what you would expect. If you have more time, there's more uncertainty, and the VIX should be higher. But the concerning thing to me here is that they are pricing a lot higher VIX going out, and it's not coming in at all over time. So this tells me the volatility is here and it's going to stay for a while. And if you take a look at the skew, just take a look at some of the uh, put options just to see it. So you go out to February, and the implied volatility on the 680 puts is 13.99%, and go out to the 670s, and that implied volatility is at 15.10%. So constructing a cheap put spread, if you need protection at the 680, 670 level, with the skew highly in your favor, costs you $2.77, and you can basically have a max profit of about 723. So this is definitely a way to go, given that the skew is in your favor. If you were constructing, let's do the same thing, except take a 685, 695 call spread. Uh, basically the same amount out of the money, and you're paying twice as much for that call spread. And that tells me that the skew is definitely not in your favor on the call side. If we take a look at the implied volatility, and let me just close that a little bit. Here we go, is implied volatility. If you're buying 685 at 13.43%, you're selling 12.3% volatility. That's one of the reasons why 10 points call spread is almost twice as much as a 10-point put spread. That's usually more detail than I go to on an equity video, but I just wanted to point that out, that put spreads are cheap and call spreads are expensive. So does that mean that they still expect upside to the market? Maybe, but it's also a factor of what the skew looks like. The farther out you go out of the money, the higher the implied volatility is, as you can see here. In any case, that about says it all, except for let's take a look at what the economic calendar looks like. On Friday, we have ISM manufacturing. We're almost back to normal on these economic reports. Auto sales will be reported on Monday. Tuesday, Richmond Fed, Barkin speaks, and then final services PMI. Things start to heat up on Wednesday when we get ADP employment, ISM services, and JOLTS 10 a.m. factory orders as well. And then Thursday, we get our typical initial jobless claims, trade deficit, and productivity. But things heat up on Friday when we get the monthly unemployment report, or unemployment report, whatever your favorite name for it is. Unemployment rate, wages, and housing starts, I guess, and consumer sentiment, which has been at a low so far this week. So Friday is jam-packed, and you can see that why I'm saying that the volatility does not reflect what we have. So, taking a look at earnings, which aren't really kicking off this week, and you can see here that there aren't many well-known names kicking off this fourth quarter earnings. What's the one? What are the ones we've probably heard of? Greenbrier, and that may even be a third quarter report. Who knows? Um, Jeffries and Constellation Brands, um, and so those Acuity Brands, some of the lesser known, but earnings don't really start in earnest until say second and third week of January. So overall, it's kind of passé to say expect volatility. I mean, what else are you going to say? I think that you know the easy money, it sounds silly to say it, has been made. And I think we're in for a more choppy environment. And obviously, you can say that and not be wrong in most periods of time. But I especially think that we're going to have a lot of cross currents. We have a midterm election. But it would be good for the market to digest the move we had last year and come in a bit. But I would be having stuff on a very tight leash. I wouldn't give it too much room. Observe those stops, and especially if you're in your options, if you're trading options, don't don't go to 100% premium on those. It's just silly. In any case, we'll see what happens this week. I appreciate you tuning in. Gonna try to do these every single week and tell your friends about it. My name is Sam, Trader Geek Sam. You can reach me at Twitter on at Trader Geek or in one of the forums that I participate in. Take care and thanks for watching, and I'll see you next week. Bye bye.